Here's what matters right now. Nvidia just delivered another monster quarter, smashing Wall Street expectations again. But here's the twist. While Nvidia's stock is already pricing in years of growth, the smarter play might be watching where Nvidia is quietly putting its capital to work. This episode is about leverage, specifically leveraging Nvidia's strategic investments to uncover stocks with asymmetric upside. We're looking at three companies Nvidia has taken equity positions in. That's not marketing, it's capital. And in this market, Nvidia's conviction is often a leading indicator. Welcome to AI Stock Radar. If you care about real fundamentals, high-quality growth, and positioning ahead of the AI curve, this is your edge. Let's dive in. Nvidia's Q1 2025 earnings didn't just beat, they redefined expectations. $44.1 billion in total revenue. $39.1 billion of that came from data centers. That's a 73% year-over-year increase, driven by AI infrastructure demand that's showing no signs of slowing. Jensen Huang made it clear on the earnings call, "We're just getting started." But beyond the headlines, there's something far more interesting. Nvidia isn't just selling GPUs anymore. They're building an ecosystem, a power structure. And one of the sharpest ways to trace that structure is by following Nvidia's equity investments, where they actually put money to work outside their own balance sheet. Let's talk about three companies Nvidia has recently invested in, each a potential breakout, each riding directly on the back of Nvidia's exponential growth. First, CoreWeave, ticker CRWV. CoreWeave has gone from obscure to essential seemingly overnight. Originally an Ethereum mining operation, it pivoted into an AI-native cloud infrastructure firm and is now a real contender to legacy players like AWS and Azure in GPU cloud workloads. Nvidia liked it enough to take a stake early, and after CoreWeave went public, Nvidia doubled its position, now holding close to 10% of the company. That kind of vote of confidence from a $2.5 trillion behemoth is not subtle. And the market noticed. CoreWeave's stock jumped from around $15 to nearly $40 in just weeks. At its peak, CoreWeave hit a market cap north of $50 billion, up from under $20 billion a few months prior. But the valuations are frothy. Forward price-to-sales ratios are soaring. Analysts are cautious. This isn't a profit play yet. If you're a long-term investor, don't chase it here. Wait for volatility. Wait for a shakeout. If the thesis is long-term infrastructure leadership in AI workloads, there will be a better entry. Nvidia's conviction gives it credibility, but the price action demands patience. Now let's look at something smaller but equally compelling. Navitas Semiconductor, ticker NVTS. At under $1.5 billion in market cap, Navitas is a David among Goliaths. They build power semiconductors, specifically gallium nitride and silicon carbide chips, for next-generation data centers. In a world where AI training is energy-intensive and heat-heavy, this kind of tech becomes essential. Nvidia didn't just sign on as a customer, they invested. That's a big tell. At the time, Navitas was barely valued at $500 million. Nvidia doesn't take flyers, they target synergy. The result? NVTS rocketed from $2 to $6 on news of Nvidia's stake. It's retraced a bit, but the technical setup remains strong. The thesis is clear. As AI models get bigger, the energy cost curve becomes a bottleneck. Navitas provides the solution to that bottleneck. Is it speculative? Absolutely. The business is still ramping, but if you're looking for a next-gen semiconductor name tied directly to Nvidia's infrastructure stack, this one's worth watching. Just understand the risk. You're betting on execution, not earnings, at least for now. And then there's the wild card. WeRide. Unlike the others, WeRide isn't public yet. It's a Chinese company working on Level 4 autonomous driving tech. Nvidia invested early this year, and rumors of an IPO sent a ripple through the autonomous vehicle space. Why does this matter? Because autonomy is one of the most hardware-intensive AI use cases. These vehicles don't just drive, they compute constantly. Nvidia's Drive platform sits at the heart of that stack, and WeRide is one of its closest collaborators in Asia. The stock pop? There wasn't one, yet. But the public interest surged. Companies like Aurora and TuSimple saw sympathy moves on the news. And if WeRide does IPO, expect volatility. Here's the risk. Nvidia has invested in AV players before and walked away when progress stalled. This space is notoriously hard to monetize. Regulatory pressure, capital intensity, and hardware complexity all add friction. But here's the opportunity. If Nvidia adds to its stake, or if WeRide confirms an IPO, this becomes a headline stock overnight. For now, it's a high volatility, high reward name to track, not touch. So, what can we learn from these three moves? Simple. Nvidia is doing more than selling shovels during a gold rush. They're planting seeds across the AI landscape. From data infrastructure to energy efficiency to mobility, they're betting on the entire stack. If you're an investor, that's a roadmap. Follow the money. Follow the relationships. Nvidia is quietly curating the future of AI through equity exposure, and those exposures can become asymmetric trades. That doesn't mean buy everything Nvidia touches. It means track their conviction. Watch for scaling behavior. Look at capital commitments, not headlines. The market often overreacts to noise and underreacts to structure, and structure is what Nvidia is building. Now let's be honest, these aren't risk-free bets. Valuations are elevated. Market volatility is rising. A single Fed speech or geopolitical shock could send these stocks 20% lower. So don't chase. Build your watch list. Wait for the market to give you the opportunity. And always, always do your own research. Nvidia may know where the puck is going, but it's your money. Treat it with respect.